Welcome back to another Targets in Focus. Today I'm joined by Michael HEWSON from CMC Markets. So Michael, what are you expecting for the euro-dollar in the short, medium and long term?
Okay, well, in the short term, medium term and long term, I'm looking at potentially further euro weakness. Now, that may seem strange given the fact that there's problems within the US, but I think the problems within Europe are more likely to offset the problems in the US. And there are a number of reasons for that. Last week we had the bailout, the new bailout for Greece. However, there are concerns that the changes with respect to the EFSF could well find it difficult to get through the various member parliaments within the 27 EU countries, not least in Germany, where there is incredible disquiet about the fact that they could well have to pay for the remaining additional funds that need to go into the EFSF. Now, at the moment, the EFSF is only about 440 billion euros. But that's by no means enough if contagion spreads to Italy and Spain. And already, bond yields in 10-year Spanish and Italian paper are starting to creep up again over the uncertainty that's starting to filter back in with respect to these additional measures. Now, Angela Merkel's come out and basically said that these measures won't be debated until, or sorted out until September. So that creates additional uncertainty. So while in term, we may see a little bit of a move higher in euro-dollar to around about 144, 140 month or so. We'll see it slip back towards 142, and then over the course of the next few months, as concerns continue to filter through the market with respect to Portugal, Spain and Italy, we could see a drift lower towards 138 and then 135 over the 12-month period.
Let's move on now to the Euro-Swissy. What do you see happening there?
Well, we're already seeing evidence of safe haven inflows into the Swiss franc, and especially against the euro and against the US dollar. And basically for the reasons I outlined earlier, I think the Swiss franc will benefit from these safe haven flows, from the uncertainty that's not only gripping Europe and concerns about the sovereign debt crisis there, but also in the US. So in the long term, I see further gains for the Swiss franc to around about 112.20, 111.80 over 3 months, and then towards parity ultimately over the next 2 to 3 years as these concerns within Europe continue to grip the markets, because at the moment there is still no clear and present idea of how EU leaders are going to get to grips with this crisis that's actually enveloping the monetary union. And the appetite in Germany, I don't believe, is there for them to basically underwrite the remainder of the EFSF, which basically does need to grow to about 2 trillion euros. So that's going to push more money into the Swiss franc, and the Swiss National Bank, no matter what it says with respect to it doesn't want a stronger Swiss franc, I don't think intervening will stop the capital flows into the Swiss franc. So they'll probably try and talk the Swiss franc down, but ultimately they will probably fail.
And finishing off with the cable there, what are your predictions for this pair?
I expect the US dollar to slowly gain against the pound, and not because I think that the fundamentals for the dollar are any better than they are for the pound or the euro. We've got the debt ceiling discussions going on with respect to the US dollar. Obviously there are concerns about a credit ratings downgrade, but that could actually push US interest rates up and can actually, strangely enough, push money back into the US dollar. Tomorrow we've got UK GDP, second quarter GDP, the first print, and that's likely to be on the weak side. And I think what that could do with respect to the pound is encourage more calls for quantitative easing in the UK, and that, I think, in the long term could undermine the pound. I think further QE in the US is unlikely, given the political deadlock at the moment that we've got between Republicans and Democrats. I don't think there'd be any appetite for further quantitative easing. We've already had $2.1 trillion worth of it, and it's debatable as to how good that has been. People have been talking about Jackson Hole at the end of August and possible further measures, further QE. I think that could well not happen, and as a result, I think the dollar could also gain on the back of that, pushing it up against the pound. pushing the pound down towards 157 over a 3-month period and ultimately over a 12-month period to 152, given the fact that US growth is likely to be a lot better than UK growth over the next 12 months.
Well, thank you very much for that, Michael. For more economic news releases and interviews, stay tuned throughout the week.